Good evening. It's Vijay here. Welcome to a special session on Are we in a market bubble? Typically, I used to do these weekend sessions about what will happen next week based on what has happened this week. But today I'm going to focus on an interesting topic, which is people are discussing it now in the market. Are we in a bubble? And can we trade a bubble? What I have told people generally is that we should not get afraid of bubbles because bubbles are the places where you can make maximum amount of money in the minimum amount of time. So long as we know where our stop losses are. I have been advocating, you put a trailing stop loss and then, get into the market without fear, and if your trailing stop loss gets hit, then so be it. On the other hand, if you just simply sit and say, okay, the market is overheated, what can I do? When can I enter? I'll be in cash, then you may miss an opportunity. This I'm basing it on my past experience that, in the past, I too was very, very cautious and I used to take out money from the system. Invariably, about 15-20% below the top. Nobody knows what the top is. But then what happens is when you take out your money 15-20% below the top, I'm talking about the index top. In certain stocks, you may miss even 40-50%. So sometimes, you have to go with the flow. Nobody knows the top, as I said, but at least you can put a trailing stop loss. Now, let us try to understand some things of the bubble, how the bubbles are formed, what happened in the past, how we can, handle the bubbles, and where the bubbles are formed. So, before we go there, let me just try to share some charts and try to explain to you about some things where people think it's a bubble and what has happened after they've thought it's a bubble. Okay, let me just share a screen. Okay. Now, this one is the Nifty Micro Cap 250 Index. If you see, if you take as the start of this big bull rally somewhere, this is a monthly chart. If you take it somewhere in the beginning of March of 2023, actually, mid of March 2023, there was gloom and doom. And so everybody thought that the market is not going to go up because remember, it was Adani problems at that point of time. But I had warned people, actually, I told people that, this could be a beginning of a significantly higher numbers because from April 1st of 2023, the budget had allowed the gift nifty route for the foreign portfolio investors to come into India. I discussed this on Twitter with a couple of spaces, but people did not realize it at that point of time as to what could be the magnitude. So the foreign portfolio investors came through what we call the P notes through the gift city, and they're still there. Now, of course, we know that foreigners are selling, but there is significant amount of money coming through the gift nifty, gift city. You also should know that not all FIs are really genuinely FIs. It could be round tripping of money which is coming in from the local people who put in money through the gift city and it comes there. So we don't have any way of knowing what is the proportion, but suffice to say, based on my experience, I can tell you that in amount of money comes in through that. Now, if you take from 1st March of 2023, the month of March 2023, and you see the market had gone up about close to about 100%, 120%, when the authorities in India, this is early 2024, when they began to feel uneasy. You also had the Kotak small cap fund closing down any fresh monies into it. So there was a lot of noise made on that. And promptly SEBI came into picture, and SEBI chairman on 14th of March 2024 said that there is a risk of a bubble. And usually the bubbles do not happen so much so in the large cap indices. They happen in the micro cap, small cap indices, and then the mid cap it will spread to, and then it will go to the large cap. So we really have not seen any major bubbles in the large cap indices for the last maybe since 2008. So 16 years we have not seen. We've had uh, indices going into highly overbought and having a significant correction. Whether we've seen it in 2015, we've seen one, 2018, we've seen, 2020, we've seen, 2021, 22, we've seen large cap corrections. But they have not been so significant for us to feel that they were in bubble territory before they topped out. 2010 also we saw a double top of Nifty and Sensex. So therefore, if SEBI chairman at that told us that on 14th March, what was the index at that point of time? The micro cap index was about 17,350. From there, it has gone up another 40%. If the regulator felt, if the regulator felt that there was a bubble, she mentioned this. There is a risk of a bubble. So now what is happening here? Based on what her theory is, then we are really in a bubble territory. And the market simply seems to go independent of what is happening around us. So we can say, by the classical definition of what the regulator thinks, we are in a bubble territory. But then, should we worry about a bubble territory is what we will come to. Before that, let us try to understand the classical definition other than the regulators. I'm talking of generally what people think is the definition of a bubble. So a bubble works like this. There is something called a stealth phase. You see, I've taken the Sensex here. So the stealth phase, say, began somewhere in March of 2020, when the COVID fear happened. So in the stealth phase, what happens? In the first phase, this red arrow, it the Sensex went up to some 42,600, which means it was almost a double top. So the market fell off from 42,650 to around 25,800. And then the smart money started accumulating. Start money accumulates in the stealth phase. And once enough accumulation is done, then you'll get to hear that the confidence returns only when it crosses the previous high, which it did somewhere in November. If you recollect, in November, at that time the US elections were there, and we broke out of that range somewhere around Deepavali day, somewhere 14-15 November we broke out of 2020. That is the takeoff phase. That takeoff phase was ferocious. It did not bother about the second phase of COVID, which was more, let's say, dangerous than the first phase of COVID. So that is the takeoff phase where money was poured in left, right, center, including RBI did something like a quantitative easing. So that landed into a significant top around the October, mid-October, when the market peaked out on the Nifty and the Bank Nifty and the Sensex. Of course, the small and mid cap and all of them peaked out only in January of 2022. So there is a first sell off. So this is how there is a stealth phase where the smart money invests. Then there is a takeoff phase, which everybody comes to know that we are now into a new high. So let us buy, and good amount of money comes in this takeoff phase. Then there is a sell-off because excesses would be done in the takeoff phase, where we saw a lot of IPOs coming, especially these platform stocks IPOs came around that time. So the market could not bear. So we had a first sell-off. The sell-off bottomed out around somewhere in June 2022 during the war, the Ukraine-Russia war. Then it again did nothing for some time, and then the hype started. I would say this, it did go make almost went a double top and then came down because of the Adani problem. And then you had the hype that is between April and somewhere September. If you remember, September 2023, we had the G20 meeting, and a lot of hype was created because you had the US president coming and so many things happening at that point of time. So that was the hype. Then it had a correction after the good news, which is the G20 meeting, and did nothing. And then the greed phase started. The greed phase is that phase when the election in the three states happened in December, and then when the election results were very clear in favor of the BJP, then heavy buying started. So there it became the greed factor. So there was greediness right up to the to Ram Mandir inauguration, and certainty that the BJP will get 350 seats. So then, on in the first week of July, first week of June, the market fell down because of the results not being in consonance with what the market felt. Now there it fell down significantly. I would call that as a bear trap because it suddenly shot up after that. See, so that took the market. What shall I say? Down for only one day actually, and then it invariably started moving up. So that was a bear trap because people became bearish. They sold off the bulls. The weak bulls went away, and the people who bought here are as strong as the people who bought in the stealth phase. They are as strong as that because they bought against uncertainty. So only strong people can buy against uncertainty. Now, all of us, including me, were wondering whether it is a bull trap. A bull trap is where it crosses the high of the previous high, which is the day before the election results, and then it hangs around. So it was hanging around there. So I assumed it could be a bull trap. I was just thinking maybe it's a bull trap. So I was being very cautious. Now, after that, when it crossed that and stayed above that for some time, then you begin to wonder whether we are now moved away from that and gone into something else, which is what is the beginning of a bubble. Now, this is just the beginning, I feel, as far as the indices are concerned. As far as the micro cap and small cap indexes are concerned, it is already, as the regulator themselves declared, it is a bubble. So we have to differentiate that, there is a bubble in the micro cap and the small cap. And if we take the small cap, for instance, you see here, small cap and mid cap also have gone up significantly in the last 1 year, 94%, and small cap has gone up 107. The micro cap is where it has gone up 145%. That is where your bubbles are. Now, so if you look at simply the Nifty or the Sensex or the Bank Nifty, you can argue that we are highly overbought, but not in a bubble. So it may take some time to form a bubble in the indices, and once the indices move away from their overbought or move away from their bubble territory, then you will see a dramatic decline in the small, mid, and micro cap. First, it will start in micro cap, then small caps, and then it will come to mid cap. So this is where you have to be concerned about your bubbles. So therefore, when will you think that the bubble has has been smashed? Is when it closes. It closes below the low what we saw on June 4th. Whatever low we saw on June 4th, if it closes below that, then you can say the bubble has been smashed. Till that time, it is useful to understand that the bubble has not been smashed. Therefore, one should be buying on all declines. So here, if you take on Nifty, for instance, in this case, 21,200, I would say somewhere 21,281 was the low on June 4th. So unfortunately for us, the bubble you can find out only when it has broken the significant low which we saw. This is because I told you that these are the guys who came. They're very strong people. Only when it starts trading below this, then one should be worried about that the bubble has crashed. If you look at this 21,275 is a very strong support right from December of 2023. So we should not worry about bubble right now. Yes, surely as far as authorities are concerned, there is a bubble there, but you should ride the trend, in my opinion. That is what I am doing. I am buying stocks where the P ratios are still below 20. I mentioned last week I was looking at textiles and paper. Now I continue to look at low priced, low value, high value in terms of, but low in terms of PE stocks which are there in pharma. It could be in any other sector. So I'm actively looking at that. But I am not scared of the bubble because I have got my stop losses. For the very short term, as I mentioned, my stop loss on the Nifty is 24,200 and below. On Friday, for instance, the Nifty actually went below 24,200, but 24,168, but it did not close there. So if you're a very short term trader, maybe you can look at 24,200 and trading a couple of days below 24,200 and you can get out. If you're a medium term trader, you have to look at the previous week's lows. That is, the previous week's low will be somewhere at 23,300. 23,300. The short term low is 24,200, where short term traders can get out. 23,200 for the intermediate term traders. And for the long term guys, 21,275. Now, if you look at, if you get out even at 21,270, if and when it reaches, then we will still get, in my opinion, significantly lower numbers. It could be as low as 17,000 also. But we will not worry about it right now. What we need to do right now is to simply concentrate on trying to buy the dips and trying to buy good stocks which are still available in plenty, and look at sectors where there is still no froth. As I mentioned, textiles, paper, and pharma, there is still no froth. We should look at those. I mean, I'm not advising anything, I'm not talking of any particular stocks, but what I'm only saying is that there is pockets of value in the market even at these levels right now. If you can see a bubble can be seen in micro cap and small cap. I am not seeing a bubble yet in the large caps or in the index. It could probably be the beginning of a bubble, but I wouldn't say it is a matured bubble at this point of time. It could still fall down. Basically, it may not happen to be a bubble, but it can still fall down. So for that, we have our trading stop losses. So in that, with that particular view, I think we should get in and trade the market. So I will be coming with my market commentary for tomorrow. I've got lots to talk. This itself has gone very long, and I will also talk about how to identify the tops in the market in the next session, special session, which we'll do next Sunday. Till then, take care. Have a nice weekend. Goodbye.